Now, the solid growth and low unemployment and stock market records, well, it's quite clear that the US is by far the best at the moment. In fact, it is the lone bright spot in the global economy. Just look at the rest of the world and those key economies, and you'll see exactly where we're going next and why we're putting so much emphasis today on the US. We learned today that German industrial activity plunged again due to weak demand. Now, we know that the country have narrowly avoided recession in the last quarter, but frankly, there's no difference between narrowly avoiding and actually hitting a recession. The way at the moment it's so low. France, we're well aware, has been gripped by national strikes that's dragging down productivity, and those strikes don't look like they're going away anytime soon. And the United Kingdom, Britain's enduring its third general election in 4 years, bringing massive uncertainty for businesses of Brexit, and Brexit is still unresolved. If all that weren't bad enough, Japan also joins the troika, if you like. Japan is now resorting to a massive new stimulus program. Shinzo Abe is hoping to avoid recession, and he's doing it with $120 billion shot in the arm, keeping recessions at bay. But remember, Japan still had deflation in the past. It never really recovered from that. The sluggish growth has been there forever. Paul Gruenwald is the chief economist at S&P Global Ratings. Their S&P 2020 macro outlook says US-China trade war will continue to be a downside risk. He joins me now. The downside risk from the US-China talks seems to be hitting those participants or non-participants, i.e. Germany, the UK, Japan, everybody else, harder than the United States, which is the protagonist.
Yeah, hi, Richard. You're right in a sense, because we've had some collateral damage from the trade war. The large domestically driven economies, such as the U.S., I would put China in that camp as well. They've come through with only moderate pain, but the countries that are more open to trade and manufacturing, such as Germany, Korea, maybe Japan on that list as well, you're right that they've been hit harder. So as you said earlier, the U.S. is looking relatively well amongst the advanced economies for 2020.
So as we look at 2020, where does it go? In the sense that, does the US continue to chug at a respectable, if not exciting, pace, whilst there is no evidence that those other countries pick up speed? Far from it, they may actually worsen.
Right. Well, as you mentioned earlier, we're very long into this expansion. It's been 10 years since the global economic crisis. So the criterion right now should be to prolong the expansion as long as possible. So we want countries close to their speed limit. The speed limit for the U.S., economists would call that the potential growth rate, is a bit below 2. That number is about 1.25 in Europe. So if we're at 2% growth and 3.5% unemployment 10 years into an expansion, that's a good spot. I think Chairman Powell had the right language there. So the objective next year and maybe beyond to 2021 is to try to maintain that. We're not looking for a V-shaped sort of trajectory over the next couple of years. We want slow and steady, and 2 is a good number for the U.S.
Right, and what about emerging markets? I'm starting to read a lot. I mean, they've been clobbered badly so far, both on a dollar trade basis and indeed on equities, and because of the China deal, or lack of a deal. But I'm starting to people say that the main market activity in 2020 could be EM.
Well, if the U.S. is slow and steady and the Fed's on hold, which is our forecast, that's not bad for EM and that's not bad for risk appetite. There are economies, as you mentioned, that have had collateral damage from U.S.-China, but there's other countries such as Vietnam, Malaysia, Mexico that have had some upside. The real worry about emerging markets is usually sudden stops of capital flows and volatile flows. So if we're in a calm Fed environment and a calm U.S. growth environment with a low vol and a low VIX, that's probably a decent year for EM as well.
If I had to ask you what your gut's telling you, into 2020, because we're in December, I mean, do we sleep easier on economic front? Do we sleep easier next year?
I would say we still have the big issue unresolved, which is U.S.-China tensions. We've been arguing for a while that this is not about trade, it's about technology, intellectual property, China's place in the global order. The U.S. and China don't appear to be making a lot of progress on that. So although our baseline output or outlook, which we've been discussing, is good, there's still that big cloud hanging over the outlook. That's probably enough to keep some of us at least partially awake at night.